Hey guys, Doug the Retirement Guy. All right, let's drive into something pretty wild today. We're talking about a totally new way to think about income. There's a brand new ETF from YieldMax, and it has the same name that you won't forget, and that's called SLTY. The ticker is SLTY. It's YieldMax's Ultra Short Option Income Strategy ETF, and we're going to cover everything about it today and break it all down. So before we get into that, we got to throw a big thank you to all the Patreon supporters and all of our new subscribers that have joined on. Guys, you're doing wonderful. And if any of you can still help support us on the channel, it does a great job to keep things rolling for you. So if you can, go down in the description. You'll see a button that says Patreon. Click that and join in. Let's get into today's video. Notice to all viewers, past performance does not guarantee future results. The information provided in the video is educational and informational purposes only. It should not be considered financial or investment advice. The examples and suggestions discussed are illustrative and may not be suitable for individual situations. Always consult a licensed financial advisor or professional for making financial decisions. So basically, income when stocks fall, that doesn't make any sense. How can that actually be? When stocks fall, SLTY starts making money. Because today we're going to break down exactly how this thing aims to pay you weekly dividends when the stocks are actually going down. And that's the big question, right? How can you protect yourself when things are going down? How do you protect yourself when things are always, we're always looking for things to go up? Because usually we think about income investing, we're always hoping that the stock holds steady or it's going to go up. But SLTY has built the exact opposite, that they are really looking for the stocks that are falling, and they're going to try to capture the downside instead of always trying to capture the upside. So it's kind of a different way of looking at things and a different way of processing. And in today's times, probably the perfect time for this to be introduced. And, while we're seeing the NAV erosion on so many weekly paying ones, maybe this is the saving grace that we're all been looking for, and put an insurance policy into our pocket. So let's take a look at what really SLTY really is. So who is SLTY? Well, it's YieldMax's Ultra Short Option Income Strategy ETF. The objective of this fund, SLT, is actively managed, and it's seeking to generate weekly income while providing the short exposure to share price of a portfolio on the US listed equity stocks. So really what they're trying to do is the underlying stocks. SLTY is also seeking to participate in the potential declines in share prices in those underlying stocks. Okay? So in long version, in Doug's version, is they're looking for stocks that are on their downward trend and they want to suck it up, and then they want to turn around and they're going to sell put options on those calls. So SLTY's advisors will typically select between 15 and 30 underlying stocks, to which the fund provides short exposure, and then they generate that income through option strategies on the short stock position. So one strategy is basically selling or writing put options, which allows SLTY to collect premiums from buyers who pay the right for that transaction. So this fund just come out August 20th, and I wanted to get this out here to make sure everyone understands what this is about before you jump in with both feet to find out what the fund is all about. And before I jump into telling you everything about it, does this already sound like something that we already have? Is there something out there very similar to this? Who does this really sound like? And it's YieldMax's Ultra Option Income Strategy ETF, or better known as ULTY. ULTY is an actively managed ETF that seeks to generate weekly income from a portfolio of covered call strategies on US listed securities. This is the big brother to SLTY. SLTY is the little brother or little sister to ULTY. So your ULTY is designed to capture the upswing, while SLTY is to capture the downswing. So kind of interesting. I figured some of you probably didn't catch the two at that time, but you now understand where the difference and why they're coming out with this package. So what is the difference? Well, it's real simple. ULTY, I think there's a misspelling in there, but ULTY targets stocks with an upward momentum, aims to benefit from the price increases, while SLTY, SALTY, targets the stocks with a downward trajectory, aims to the benefit from the price declines. So ultimately, what they're trying to do is harvest those juicy premiums and make a lot of weekly dividends from items going down and collecting those fees. Same thing why ULTY is trying to do it on the upward swing. So it's kind of an interesting option how we have of these two at this time. So let's show you how. And when we look at the Salty's holdings, well, this is what blows your mind. You got some high flying tech names like CrowdStrike and Dell. And you also got some crypto stocks like MARA. And then, the new one, the Robinhood, which we've talked a lot about. But this is actually the direct line to Robinhood. And then they also get into like the Abercrombie and Fitch. It's almost like back in the 80s. Here we go. Abercrombie and Fitch is back in the swing of things. But these are companies that they look that have the high maneuverability and high volatility of going up and down. And this is where they want to find their niche. They want to find this type of companies that they can create and generate the profits from. So it's a very strange or very different way of creating income. But in today's troubled times, it may be the saving grace that we allow them, that we look for. Now, when we take a look at this, Salty started off much higher. And this is the one thing I have a big concern on. Is this going to be the new ULTY program? They started over about $50 a share, and ULTY is much lower, as it is now. And I know a lot of people are going to turn around and say, "Oh, I'd rather, take ULTY when it's only $5 to $6 a share versus a $50 share. I can buy 10 times the amount of shares." And you're right. And that's why we're waiting for more information to give you. What kind of a dividend are they going to pay? Where is it going to come to? And are we going to see this thing drop down? That's what makes me worry. If we're going to see the drop, or are we going to see things progress and hold tight? So Salty can be used in a specific stock are falling, even in other overall green markets. So what this means is they're always looking for the stocks that are on the down. Even when stocks are in the green, there will be some down that will be out there. So we're going to be a clear new tool or an unnecessary risk for investors. That's kind of the question I'm coming back with. Is it a new tool? Or is this just a new gimmick because markets have been down and we're going to try to cover some, again, get some new investors into this? I got to put more legwork into this. I got to look at deeper into it. And that's what we're going to do here now is pop the hood and find out how has it been working? Where are we going? So when we take a look at SLTY right now, I call it's finding its base. Like all the yield max programs we've seen, they come out with a high price. They allow it to find its what I call base, and you don't want to mess with this thing for at least 2 to 3 months for sure. We look at the first week already, it's down 1.42%. You can see the chart on the board already. It has had some big drop-offs already. It's recovered a little bit, but we're expected to see this on a regular basis. They had a high of $50.47, a current price at $48.75. The weekly low is $48.08. I know it's only been out there just a few 5 days, but that's what we call it, the 52-week low. So overall, it's a brand new fund. We wanted to give you guys some update to it because there's been some talk about it that this may be the saving grace out there because as the markets are going down and struggling, and it may be in the next 2 months, could be a good time for this fund because normally September and October are very volatile months in the stock market. But right now, this is not the time to jump into this with both feet. This is not your saving grace because we don't have enough information. We don't have enough knowledge about where this fund is actually going to run. We take a look at the assets under management, and they're basically sitting at 6.11 million to start off with. So it's not a bad fund to start with, basically 125,000 shares that they expect to sell. With those kind of numbers, they're trying to aggressively go after what its big brother's doing, which is ULTY. They're trying to get up to those kind of numbers right off the bat. But you got to prove yourself. Look how long it took ULTY to get it reorganized from when it started to reorganizing. Then it finally fell down to a lower number, and now everyone's talking. It's a $5 fund. It's a $5 share that pays 10 cents. Will SLTY be that? There's some things that we have to drop off to, because the other big one right now, there has been no dividend announcements as of yet. We don't know what this fund's going to pay. So we can't endorse it. We can't tell you this is a great income strategy. We know that it's got some great build behind it. It's got some good knowledge behind it, and it's looking for the downward trends, which is a positive. But until we get the history under our belt, we can't really endorse this or do anything about it. So we put this on our list and say, in our eyes, this is just a wait and see. So this video is more about giving you guys the knowledge up front. When we do get more information and we can run this through, you're going to know what this is about. And do you want this in your portfolio? And down the road, again, we've learned from the original ULTY, we're going to learn with SLTY at the same way that, where's this thing heading? The $6.11 million is a great start. We don't know what the return on investment is going to be. We know the share price have already dropped 1.42 over 1 week already. We don't know what the income is. So realistically, the forecast is unknown. We don't know yet where this is at. But overall, guys, this is what they've come up with next, is to give you on the downside. So please don't buy into this just because you want downside protection. This is not going to give you that. This will give you some downside protection, but in different funds, and the funds have to be going down, not the opposite. So guys, this is Doug, the Retirement Guy. I hope you like what we did here. I'll click that subscribe button. Leave us your comments. What do you guys think? I expect to see a lot of different words and comments about this, but I believe SLTY today is not in the play. You may think opposite, and you may think, hey, it's another yield max money grabber. Wait and see. So guys, thanks a lot, and we'll see you at the next video.